Now that real estate agent commission rebates have gained such popularity and their ability to reduce closing costs for home buyers, one of the questions that comes up sometimes is whether or not that is treated as taxable income. Well, the IRS issued an opinion letter saying that it is not. And I'm going to go through the letter and it gets into the facts of what happened. A taxpayer was a real estate broker located in State A, represented customer, purchased home, and allowed the broker representing the sellers under a listing contract to share information about properties and so forth. And then it gets into how commissions are paid. And then the taxpayer received commissions from the seller when acts as buyer's agent in connection with the real estate. Now, in this particular case, they entered into a written signed buyer's agency agreement with each purchaser it represents. In the agreement, the taxpayer agrees to pay the purchaser amount one of any commission that it receives from the seller in a completed sales transaction. It means commission rebate generally used toward the closing costs. They pay the purchaser in one of two ways: after closing, and the cash and loan proceeds are distributed to the seller and the agents, and afterwards the taxpayer, you the buyer, receives your share. Otherwise, taxpayer can write a check to the purchaser pursuant to the agreement. Or two, this is the more common way that it's done, especially if you're getting a mortgage, it's the only way it's done, is the purchaser receives a credit at closing in an amount equal to amount one of the commission owed to the taxpayer. And the buyer's agreement permits the purchaser to use the down payment or the funds toward the purchaser's down payment, closing cost, and or reduction in purchase prices directed by the purchaser and allowed by law. So the analysis in this letter from the IRS is payments or credits are not taxable income. It goes on, it says Section 61 provides that except as otherwise provided, gross income means all income from whatever source derived. And then they got into a situation analysis here regarding a nonprofit corporation. And then down here, the same thing in regarding automobiles. What they're basically saying in the present case, a payment or credit at closing from the taxpayer represents an adjustment to the purchase price of the home and generally is not includable in a purchaser's gross income. So if you're buying a house, what they're saying is that commission rebate is not considered taxable income or part of your gross income. Now, when it comes time to sell your house, it does come into play if you have any capital gains, because it is considered a reduction in the purchase price. So if you buy a house for $500,000 and you got a commission rebate of $20,000, then as far as the IRS is concerned, you paid $480 for the house when calculating any kind of taxes that might be owed when you sell it. And then it gets into whether or not a 1099 or any of these forms need to be sent. They really don't, according to this. And a couple of ways: if a real estate agent accidentally sends you one, you can ask them to retract it, or B, you can just send a letter with your tax returns explaining why it's not taxable income. Generally, a copy of the letter could be attached, and that would help you in determining or when it comes to filing. Now, I will say I'm not a tax professional. Don't consider this as tax advice. Please consult with your tax preparer or tax attorney or anything along those lines, because everybody's situation is different. However, overall, as mentioned, it's considered when you get those rebates to not be taxable income. Hope this helps, and have a great day. Bye-bye.